As the mall declined, this home goods retailer found itself in need of a remodel, a lean into luxury, a move toward membership that's serious about service. The stock has been rewarded. Has the company been restored?
Yesterday, we watched in awe as RH, the company behind Restoration Hardware, saw its stock soar more than 30% in response to a phenomenal quarter. Some of this had to do with a monster short squeeze, but a lot of it was simply because Restoration is making a killing here. Turns out, a really strong economy is great for a super high-end furnishings emporium. Who would have guessed? This is such a terrific story that we need to go straight to the source. So let's check in with Gary Friedman. He's the bankable chairman and CEO of RH to learn more about the quarter where his company's headed. Mr. Friedman, welcome back to Mad Money.
Great.
Thank you, Jim.
Good to see you.
All right, let's go right to it. This one should not have surprised people because at the absolute bottom, what did you do?
Well, I started buying our own stock at $27 a share and bought it over the last year 4 times, all the way up to $97 a share. So, and despite that, I think we were the 7th most shorted stock in all of the NASDAQ and the New York Stock Exchange.
All right, so what did people miss?
Exactly what we told them. Okay, I mean, now what we told them were the things that we're doing haven't been done before necessarily. We moved from a promotional model to a membership model. Most people are shrinking the size of the retail stores or closing retail stores, and we're building the biggest specialty stores anyone's ever built. So that goes the other way. People are eliminating catalogs. We're mailing the biggest source books people have seen, and we're in a lot of ways we're taking the road less traveled. And then we're completely rebuilding the operational infrastructure in the company in a very integrated way, in a unique way. And so, everything is a little different, and everyone wants to try to fit us in a box. The fact is that we're building new boxes all the time, so it's hard to figure us out.
People doubted you, but as you say in the call, you said, look, the average when you came in, the average store volume here was $2.9 million. We have stores doing $60+ million.
Yeah,
store?
We do, yeah. And even in the little 6,000 square foot stores we inherited, those that went from on average 2.9 million to 15 million in the same square footage. And in our new design galleries, we have stores in excess of 60 million. In fact, we're going to open one here in New York City that we believe will do in excess of $100 million.
I remember when you first did Chicago and people said, well, look, that's ridiculous. It looks like a country club. It's not really for... Now you're into hospitality. I'm sure they'll doubt you again. I think it's brilliant. Go ahead.
Well, yeah, and if you think about it, look, we're in the home business, and if you start with the fact we tried to blur the lines between residential and retail and create stores that were spaces that were more home than store. And the next logical step for us is to blur the lines between home and hospitality. And if you're going to someone's home, they're going to offer you food, they're going to offer you something to drink, and so on and so forth. So we said, well, we're not the first retailer to put a restaurant in a store. I remember when I was a little kid, my mom was taking me to Bloomingdale's, the Big E, the Emporium in the West Coast. But most of them, they were kind of a bolt-on, right? Like I even say, like there's a department store, I won't say their name, I respect them a lot, but they just opened a big new store in Marin County where we live, and I heard they're opening a restaurant. So this was about a year ago, and I go down to see the store, and I walk in on the ground floor. I look all around. I can't see the restaurant. I go on the second floor up the escalators. I look all around. I don't see a restaurant. And I asked someone, I said, excuse me, but I heard you guys had a restaurant in the new store. And they go, oh, we do. Just go right down there through the children's department, through that little porthole, and there it is. And I walked through, and it had nothing to do with the retail store. Right. So just having a restaurant's not the key. It's how it's integrated into the retail store, right? And so in ours, it's centrally located. It's all part of the experience. And then if you take it one step further, so you think about hospitality and another step, we're doing our first guest house in New York City, right around the corner from our big gallery. And we're going to try to redefine hospitality. And what's interesting here, everybody says to me, oh, so you're going to try to sell your furniture. You're going to make your guest house a showroom. I go, no, we already have a showroom 25 steps away. It'll be 90,000 square feet with a restaurant on the top with views of Freedom Tower. It'll be fantastic. But everything we try to do, we try to innovate, and we try to look beyond today's reality and see tomorrow's future. So we're going to do things in hospitality the world hasn't seen. So spring of 19, when the guest house opens, we'll talk more about that.
There are very few people who have both the vision and the taste, but also the financial smarts. You did a convertible bond, and when the stock was higher, and you bought a huge amount of stock when the stock was lower, and that really was to the advantage of the shareholders.
Yeah, correct. Well, so look, we got smart. We were lucky enough to go private with some pretty smart people at Catterton and Tower 3, and it was the first time. Look, I grew up, right? I was a stock boy at the Gap, so I grew up inside the company. I got booted out of junior college. I didn't know a lot about financing, but I had an opportunity to work for pretty smart people, and plus I studied Warren Buffett all the time, and I watched in 2008 and 2009. Warren Buffett, it seems like those with capital and in difficult times are the ones who capitalize. So I saw Warren was lending money to Goldman Sachs, lending money to B of A, and so when the capital markets were ripe, we thought, geez, can we access capital markets? And we were able to do 2 convertible deals at 0 coupons, right? Mm-hmm. And we had a really smart guy on our board, Barry Sternlick, who told me it's almost like free money, right? Free money, and so we were able to do that, and we didn't need the money, and that's a good time to get the money. So we $600 million plus of convertible bonds, and when we went through the transformation, we went public in 2012, and we were the perfect public company for 12 quarters, right? Mm-hmm. You get on that quarterly racetrack when you're public, right. and you know something's going to go wrong at some point. Yes. You're going to blow a tire. The question is, when you blow a tire, do you pull your car into the pits and change the tires, or do you go right back out? Right. We decided to pull into the pits and rebuild the whole car. And so that's a little strange for people. And so, but during that time, even though we articulated our plan to re-architect the back end of the business to move from a promotional model to a membership model, it looked like all the cars were going by us, and people thought, oh my gosh. And they, stock went down to 25. And when we said, look, if they don't want to bet on us, we'll bet on ourselves. And so we took the money on the balance sheet, we raised some other capital, and we bought back half the company.
Well, it was brilliant. I applaud you and your team.
My team's all here. And by the way, I have my grateful T-shirt on because I am grateful to all of them, all of our associates all through the country.
I like a CEO
and our
shares
board for
the credit with his team. Doesn't cost you anything to do that either. That's Gary Friedman, Chairman, CEO of RH. It's not done going higher, guys. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.